All right, yield nerds, I come to you today with a very generous serving of humble pie. I cried wolf on the stock exchange, on the markets last couple of weeks, and instead there were a bunch of bulls. I will tell you how bad I was, and based on that, how I am dramatically changing my strategy for the next 2 weeks. Thank you for watching. We're somewhere in the 490s. I haven't really checked lately in terms of subscribers. Appreciate your support. If you're new to the show, please use the Income Investing Roadmap. There are a handful of other playlists as well. Most importantly, don't take my word. Please do your own independent verification. Well, four parts as I very humbly stand there and point to wolves in front of the stock exchange. And I will review how my portfolio performed in the last couple of weeks compared to the markets. I have a four trigger framework. That is what I use to inform my strategy. And I will review my portfolio moves and we'll see where we go. Well, the last couple of weeks, I told you I did cry wolf, and I thought I saw wolves. So I actually sold off my prized tech stock because I wanted to get out of it. And, I was informed by the market crashing and burning. This is more than a couple of weeks ago. And boy, was I wrong. I was handed a giant dose of humble pie as the ceasefire negotiations have started and the market absolutely torpedoed higher. On fixed income, you can see that corporate credit bounced back. I was looking like $1 million right here, but my lead has vastly shrunk. I was wrong. I called wolf in the fixed income market as well. That did not pan out. The market is catching up with me, and dramatically so. Nowhere is it more obvious than equities. I would boast of all kinds of advantage over the market. The market would be down 10% and I would be up 10% looking like an absolute king. And I cried wolf, sold off my tech stock, and the market comes back roaring and it has almost caught up with me. And my wolf calling in front of the stock exchange was completely wrong as the market had a bunch of bulls the last 2 weeks. Well, why did I pick the asset allocation I did, and what is my asset allocation? At the end of the day, that will explain a whole lot of why I performed in that manner. Before I share more, I need to remind you I am not a wealth management advisor. This is not financial advice. Please make sure that you do your own checking, and I don't do product and politics either. Well, I am a very strong fixed income investor. I have T-bills and bonds that are about 86, 88% of my portfolio. The rest are in equities and ETFs. And so the main reason I do it in this manner is so I can take calculated risks, or so I thought. One of my favorite new ETFs is JAAA. JAAA is what is called collateralized loan obligations. It is debt with a 20-21 day duration. So it's extremely short debt, and it's only for AAA bonded companies, AAA rated companies, and it pays like almost 5%. So I like that. I have a bunch in JAAA, and so the main difference though when it comes to equities, you can see what I did. I sold my prized horses 2 weeks ago because I saw no end to the Iran war. And I loaded up on industrials, and look at this. I totally loaded up on energy because I was expecting higher and higher oil prices. And when the crude oil price came crashing from 115 to 96, that is what caused my portfolio to lag the market. No tech, too much energy. I made a mistake. Well, in terms of asset classes, I have kind of a third, a third, a third, if you will. I have about a third treasuries, a third agency bonds, and a third muni bonds. And this 3-something% is JAAA, and I am accumulating it over time. So in terms of credit rating, however, I am rock solid. So I have AAA, AA, and A that makes up for almost 60% of my portfolio. 37% of my portfolio is T-bills, So I really have nothing below the A's in terms of credit rating. And there is a reason for that, and I will tell you why in a second. In terms of duration, this is what is called a barbell. I have a lot in really short duration and a lot in pretty long duration where I get high coupons. And so I'm kind of playing both sides, and we'll see how that goes. Now, why do I make the decisions I make surrounded by these wolves? It's because I fundamentally have a thesis that has four pillars. One is kumbaya, the world is a better place and everything is fixed. And the second is what we call stagflation, where inflation stays, growth is stalled, and we're all in a soup. And the third is recession, where there is a credit stress, and this breaks everything. And so the question is, where do we go? Here is what I do. I feed the news of the day to Claude, and then I say, hey, based on this, where do you think it's going to go? How about that? I challenge its assertions, and I help create some of these probabilities, and I buy stock based on where I believe the market is going. And the last 2 weeks, boy, was I wrong. I was aiming for stagflation, where oil will be stuck at the 115s, the Hormuz will be closed, and some would argue, hey, that's what it is right now. But the market traded like we are in an A1, A2 in the last 2 weeks, as though the Hormuz is going to be open. Ras Laffan is the refinery in Qatar, and that is 20% of the world output. And the market is trading as though oil is already below $80 a barrel. You do you. The market is starting to price in a cut for the Fed, and the market thinks Wash will easily replace Powell. That's kind of in my opinion, the least likely scenario, but the market is pushing towards there. If not there, the market also appears to be trading on a bear steepener narrative. What I mean by that is the market does think there will be a rate cut, at least one cut in the rest of 2026, but the long end could be sticky. There is some level of Hormuz reopening. I really hope it does happen. But if that continues, the long end will steepen. And so, I did pick up Bank of New York, Mellon Bank, BK. And so some of this is positioning for A2. And so this is kind of how I think. I'm still giving stagflation a lot of probability. And I sold off my tech based on that. Then the question is, when do I buy back tech? When do I take more risk? The four triggers, as I call it. First is I want that oil price to come down below 80. It used to be 76 before the war. I kind of needed to start going there before I jump into equities. I would like for 20 plus ships to keep their transponders on and cross the strait. That is what will give me comfort. Not, they said they're going to do some talks, that kind of stuff. I really want to see that. I monitor a site called Marine Traffic, and there's a Hormuz Strait monitor. I look through that to see how many ships are crossing, and that is what I use. And there is some level of peace negotiations. There's some talks going on, but the question, talks are nice. Progress would be better, and so I watch for that as well. And the most important thing I then watch is whether there is a rush to quality, which then drops the 10-year rate to below 4%. Right now it is 4.38%, and so the odds of that happening is very low. And here is what that means to me. In the next 2 weeks, the odds of any one of these, the odds of there being global peace by Wednesday, and the price of oil dropping, or there being a transit framework, all of a sudden ships transiting with their AIS on, that's not happening either. Iranian government coming out with here is how we're going to do it, and people agreeing with that, that's not happening. The 10-year going to 4% in the next 2 weeks is also pretty zero. And so my best guess is that there is a small chance that we could indeed see ships crossing with their AIS on, but the bulk of it is that we're going to be in this quagmire. What does that mean to me? It means I still am not going to buy tech. I'm going to sit on my energy stocks. All of my positions are public, and so I am still going to call wolf. On Wall Street, I am not going to be a bull. We'll see where the next 2 weeks go. Most importantly, who cares what I call? Who cares whether it is a wolf or a bull or a bear? Make sure you use your own judgment, and I hope you did better in the last 2 weeks than I did. Thank you for watching YieldNet.